Hi, I'm Zach Pandl from the research team at Grayscale Investments, and I'm here to give you a rundown on the last month in crypto. Digital assets have produced stellar returns in February 2024. Bitcoin passed through 60,000 for the first time since the fourth quarter of 2021, and both Bitcoin and Ethereum delivered returns on an absolute and risk-adjusted basis that exceeded most other asset classes. In a mixed month for traditional assets, with bond prices down and stock prices up, we think this again underscores the diversification benefits of the crypto asset class. For Bitcoin, the big story continues to be demand for the new spot Bitcoin ETFs listed in the US market. In January, when these products launched, they gathered net inflows of about $1.5 billion, a very respectable start for this new product type. In February, however, these net inflows accelerated substantially and totaled around $6 billion. For the crypto exchange-traded product market as a whole, net inflows in February of 2024 were well in excess of any previous high. To put these numbers into perspective, it can be helpful to compare them to new issuance of Bitcoin. The Bitcoin network produces new coins every day as a reward to Bitcoin miners for securing the network. At the moment, these total 900 coins per day, or $54 million at an average Bitcoin price of $60,000. Over the course of February, net inflows into the new spot Bitcoin ETFs were running at about 4 times that amount per day. In addition, in April of this year, the supply of new Bitcoin each day is going to fall by half. This is an event scheduled every 4 years and known as the Bitcoin halving. So the rate of new issuance will fall from 900 coins per day to just 450 coins per day. Bitcoin's price is rising primarily because new demand is far outstripping the pace of new supply even before we get to the Bitcoin halving. For more information on the Bitcoin halving, please have a look at grayscale.com/research. Although the ETFs have been in focus for Bitcoin, Ethereum has been driven by other factors. In particular, we think markets are looking ahead to an important upgrade for the network scheduled for mid-March. Ethereum is pursuing a modular design philosophy, which means that different parts of blockchain infrastructure will be working together to deliver the end user experience. And this upgrade will help Ethereum move down that path. In addition to higher valuations, we also saw higher trading volumes for Ethereum, as well as higher on-chain transfers, an important sign that fundamentals for the network are improving. From a crypto sector's standpoint, the best performing market segment was utilities and services. This market segment includes many of the tokens that could have synergies with artificial intelligence or AI technologies. One token that we think should be included in the AI adjacent list is Filecoin. This project started out with a focus on decentralized data storage, but has expanded its scope over time and could have some synergies with AI. In addition to utilities and services, the financials crypto sector also had strong performance during February. This was mostly related to developments around the Uniswap protocol, the largest decentralized exchange in crypto. During the month, the Uniswap Foundation released a proposal which may allow some of the network's revenue to be directed to Uni token holders. And this lifted the token's valuation, as well as those of a variety of related tokens. Crypto has had a great start to 2024, and we think that the industry has a variety of tailwinds going for it, including the Bitcoin halving, as well as the scheduled upgrade to the Ethereum network. But an important lesson of the last crypto cycle is that macroeconomic factors, like Federal Reserve monetary policy or the health of the US economy, can have an important influence on crypto valuations. If macro market conditions remain favorable, we could see higher token valuations, and Bitcoin's all-time high may be within reach later this year. At the same time, macro market conditions could become less favorable. In particular, US inflation appeared to perk back up again in February, and markets began to discount a moderately higher inflation outlook. In 2023, Bitcoin's price probably benefited from the Federal Reserve's pivot away from rate hikes and towards rate cuts. But if inflation is picking back up again, the Federal Reserve may be forced to delay rate cuts until later this year or even into 2025. This could potentially hold back crypto valuations. Our best guess is that inflation will continue to moderate, allowing the Federal Reserve to cut rates, which should be a positive for crypto. But crypto investors should focus on these macroeconomic factors as well, especially upcoming inflation reports, as well as any guidance from the Federal Reserve. That's it for me. We'll see you next month.